Good day all Inderes TV viewers and listeners. In this video we are talking about Rovio as an investment with Analyst Atte Riikola. I think most viewers already know Rovio from its well-known franchise Angry Birds, but how does mobile game business work in practice, Atte?
Well, at first you have to, of course, develop the actual game. And for Rovio's casual games, that typically takes from 6 months to let's say 18 months. And when you get almost ready game in the production, then you move into the soft launch phase. And in that you test that if it has any possibility to be a successful games. And most of the games get scrapped in that phase. So first you have to test the retention. So will the players stay in the game? And after, if that's right, then you move to the monetization phase. So you test are those players spending enough money into the games, because most in the free-to-play mobile games, the most of the revenue is coming from the in-app purchases. So players spending money into the game, and maybe 20% or something is from in-game ads. So it's very very important to get players in the game, keep them there, and make them spend as much money as possible. And when you get those right, then you can move to the global launch. And then, of course, for the mobile games, it's the user acquisition. So it means digital marketing. So you have to acquire those players to the game. And you, of course, measure and model the lifetime value of one player and compare to that to the cost that you have to pay to get that player in the game. And if that equation looks compelling, then you're going to continue as long as those KPIs are right. So that means when you're launching a new game, it's typically from profitability wise negative. But then when you get the stable period, when you a little bit ease up with those user acquisition investments, then with the successful and high quality games, the profitability is pretty nice. For example, with the Rovio's Angry Birds games, current Angry Birds games, there's the profitability with, if you look at the EBIT margin per game, it can be from 30% to almost 60%. So it can be really profitable if you get a successful game into the market.
Especially more experienced investors know that some industries or some sectors are more profitable in terms of return on invested capital than others. For example, steel industry is very well known that it's very hard to create sustaining shareholder value because there is so much competition and they don't actually have very good return on invested capital. If we think about mobile gaming industry, Apple and Google, which are the distributors, they take a distributor cut, or I would call it actually a tax of 30%. The competition is insane. Tens of thousands of new mobile games are published every year on App Store alone. User acquisition costs are rising, and it gets more complicated because Apple's new privacy laws, and the retention rates are low, and of course good retention rates are key to monetize those players. So do you think that mobile game market is has attractive economics from investors' perspective, and how can a company differentiate in that market?
Yeah, it's like you said, it's a tough market, but if you're a large publisher, it's still quite compelling, because there is if you look at the market, there's been lots of consolidation because of those all the different things you mentioned. So there's many bigger players buying smaller studios, because when you got scale, you got some scale benefits, for example with the user acquisition or game development, and with all of that. And of course, if we look at the game portfolio wise, the more you have the games, the more diversified the portfolios, and the risk associated with the one game is diminishing. So it's much better to have a large wide portfolio than, for example, be a small gaming studio with only one game. So you're very dependent on that, and that's really high risk, high reward.
Or low reward.
Or typically low reward scenario. So that's why if there's new successful small game team that has some promising new IP, then typically some venture capital firm or some bigger game studios buying that because of those things. So it's from the new entrants perspective, it's really tough nowadays. But if you're like the established player with the large game portfolio, it's pretty nice, because when you have those live games and you're operating them well, they generate pretty nice cash flows, and it's quite predictable. So then it gets lots of easier, and it's much easier to keep the current games alive than create new ones and try to get them on the same revenue levels than the current games. So yeah.
And with existing games, the company can already reach a huge audience. So I think that helps with the user acquisition. For example, in case of Rovio, they already have the players in Angry Birds, so they just have to market the new games through that.
For example, for Rovio, exactly, the Angry Birds IP is like really, really important, because it's really hard to get like visibility in the App Store. But when you have like Angry Birds IP, many players download the game because of that, and it gets much more visibility into the store because of the IP. But if you're just like making some new random IP that nobody knows, it's really hard to get it into the market.
You already hinted to Rovio's strategy, which indeed is to return to the growth, invest in new games. They don't do any Angry Birds movies anymore. They're focusing on casual mobile games. But how confident you are that Rovio is able to diversify its portfolio away from Angry Birds? Because for now it seems that Angry Birds is a huge success, but Rovio is a one-trick pony. They have not been able to create another Angry Birds. So how confident you are that Rovio can actually deliver profitable growth?
Yeah, like I said, that I think that this is like the biggest question mark, that how they can diversify the portfolio. That's like also like one of the key value drivers in the little bit longer run, because if they're able to do that, it probably means that they are able to grow their revenues and diversify the portfolio, so the risk level goes down and the growth rates go up. So I think that's a good for the stock perspective. But yeah, there is like lots of work still to be done, and the nice part is that Rovio, like I said, they have like pretty nice balance sheet. There's like at the end of this year, I think there will be like 150 million euros net cash. So they have like lots of cash to do like acquisitions or invest in the game development. They have now like 7 game studios that are developing games, so there's like many new games coming, maybe, or some of them will get into the global launch hopefully, but it's gonna take some time. But Rovio has all the time, because there is like the high cash flow generating current AB games, and so Rovio has lots of time to try to get back on the growth track with the new games. But so it's kind of nice situation. There's no need to rush, because the cash or the financial situation is so good.
If we talk about Rovio's valuation, it does not look very demanding in terms of EV/EBIT multiples, or if you look at discounted cash flows and so on. So do investors have an opportunity to buy something under its intrinsic value? Or do we have just another value trap at hand? I could imagine a scenario where the old Angry Birds franchises goes down and Rovio just burns their whole net cash in the not so good investment. So how do you weave the valuation at this point?
Yeah, of course, there's always that negative scenario where that happens. But I still think at the current situation, from risk-reward perspective, it's quite interesting, because like I said, that there's like the current games that are making pretty nice profit, and for example, if we look at this year's like earnings-based multiples, the valuation looks pretty low. So there's not like lots of growth expectations priced into this share. So that's nice from investors' perspective, and then there's those many different growth options. There's gonna be new games. There might be some acquisitions. Some of them will be successful, some of them probably not. But there is like the growth options. If some of those realize, they might be like very significant compared to the current size of Rovio. So if the growth outlook gets brighter, I think then the valuation multiples will go up. So there's that's like the positive scenario. But if we say that, okay, the coming couple of next games will not be like successful, and then there's not gonna be growth, but still there is still the old portfolio that is generating nice cash flow. So I think the share there's like a limited downside because the valuation is already low. So that's why the risk reward seems interesting at this moment. So if you take like the optimistic glasses on and look at the share, there is like if everything goes well, there is plenty of upside. But if growth initiatives doesn't realize, it's still gonna be okay, or you're not gonna lose that much money. So that's why I think it's interesting.
Thanks, Atte, for comments. We'll see in the future what happens if we will see a positive surprise from Rovio or something else. Thanks for viewing the actual video. I recommend you to read the whole extended report. I put the link in the description below. Thanks for watching. Read analysis and make good stock picks.